Thank you. Thank you, first of all, for the nice organization of this event. And today we are talking a little bit on the tokenizing of the physical world. For me, it's very important. You showed the slide before, which is very important for what we are doing. So what the philosophy is that, yes, you have so many advantages on the operational side of things, so supply chain management, track and trace, documentation. But if we are not linking that to a financial side of things, because every transaction, every action has always a financial side, a treasury piece within an industry. And what we did here is by tokenizing the financial side, we can attach every information we want to the transaction itself. So a change of philosophy in a way that the financial is leading and then everything is attached. And that permits to have a full scope of the utilization of the DLT technology. So this is very important. Now, commodity and tokenization, for us, it's a success story to be written. So we are starting the whole journey. So, you know, the industry is here since many years. And that's just a couple of years where this technology is on. To get there, it's rather difficult. To get there, it's rather difficult.
Marco, you turned off your mic.
Oops, sorry. Yeah, you're right. Yeah, so to get there, it's very difficult because we have so many issues to solve. Companies are in different jurisdictions. These are big companies, need to be convinced to enter the whole organization area. We have different multitude of contracts that need to be managed. And the demand of the supply chain is changing dynamically. So the whole matters if we want to manage a tokenization transaction between countries. We need to solve tax, legal, accounting, cross-border regulatory issues. And this is not kind of an easy task. So since a couple of years, we are going country by country to make things happen in that new world. And we are using blockchain technology. Distributed ledger technology. We are not using the public chains. We are using a so-called private chain, which allows us to do much more than having a public chain available. I think that the blockchain technology in that industry is a game changer. And it's a game changer, even I can say more, it will revolutionize the way we transact. And transact, I mean the end-to-end process between the mining and then to the end. There is also talks about circular economy. I'm just combining the two. Blockchain technology can make that happen. Again, we are not there where we want to be, where the ideas, the visions are certainly there. So it's a journey. It's a step-by-step approach, and it's not kind of easy thing. As I said, we need to solve a lot of issues, and the regulatory bodies, they are not prepared as these days to make sure they split it in nearly every country. There is a split between financial and the commodity world. Now with tokenization, there is again a combination of it. So that's why it's also a challenge to go along that. What I can say today, commodity and tokenization is real. It's now. It's there. So I'm Marco Grossi. I'm the CEO of Atomyze, and Atomyze is a Zug-based company that is digitizing and tokenizing the physical world. Two areas, the supply chain management and the investment side of the commodity business. By using the distributed ledger technology. So I'm explicitly say distributed ledger technology and not blockchain because philosophically there is a small difference. Today I have with me Tim Harvey. Tim Harvey, it's a man from the old world. I call that like this, and I convinced him a couple of years ago when we started the project to look into the new world. And I could convince him after a couple of meetings and discussions, and he is now full into the new world. And I also let maybe Tim introduce himself, Tim from Global Palladium Fund.
Thank you very much, Mark. I hope everybody can hear me. My name is Tim Harvey. I am an advisor to the Global Palladium Fund. As a little bit of background, and first off, thank you to Tanya for organizing this. Tanya mentioned a little bit about Norilsk in the introduction. Some of you will be aware, some of you will not be aware, but Norilsk Nickel was voted one of the top 50 early adopters of blockchain technology by Forbes magazine in February of this year. Why is blockchain so important to miners? Well, for a number of reasons, but basically it allows us to prove to clients from the investment side or from the user side the geographical location of where the metal has come from. So this may be important for a number of reasons. Tanya also touched on things like child labor and things like that. That's how the blockchain is being used to prove the metal is coming from a geographical location which does not suffer from child slavery, general slavery, corruption, etc. We can prove that the geographic location of our metal using the blockchain, we can take it from mine face all the way through to being processed to being sold into the market or sold directly to a user. And that user can then use the blockchain to guarantee that the metal they have purchased is the metal that they wanted. We've used the blockchain for certain initiatives such as low carbon, proving that the metal that we are storing on behalf of investors or even users is low carbon. We've embedded carbon credits into the blockchain to make sure that investors or users who want to have a carbon neutral product have access to that. And it's so much more as well, because obviously when you're looking at, not just base metals, but precious metals, what we've been able to do using the blockchain is we've been able to basically give access to investors and to users to institutional pricing, institutional quality, and institutional storage. And those three, I think, are really, really important. I'll just touch on each one very quickly and then I'll hand back. But institutional quality, so all the metal which we hold on behalf of investors, for example, is either LBMA, London Bullion Market Association, good delivery metal for gold and silver. It's LPPM, London Platinum Palladium Market for platinum and palladium. And then if it's copper and nickel, which we have recently managed to issue to investors, the only physically backed products available in the world there. We're looking at two products which are LME compliant. So all the metal we hold there is basically effectively, if you look at the LME rules, it must be supplied by a miner who is on the LME good delivery list, for want of a better expression. So we're holding good delivery metal in the correct quality and quantity that the LME actually requires. And we've that's something which obviously we can prove to investors using the blockchain. Let me hand back to Marco there and we'll go on from there. Marco.
Thank you very much, Tim. So let's go a little bit deeper into one of the two areas. Remember that we said that there is a supply chain management side and there is an investment management side. So those two words, one platform can unite. And what we can see here, the information along the supply chain can be managed as a single truth of information. So if we have a transaction on the on our DLT blockchain, we can attach track and trace. We can follow that up. We can have proof of provenance. We can attach whatever we want to have on ESG. We can add quality components or key metrics, and that is managed always with a kind of the financial transaction, with accounting entry. Again, let's remind ourselves what DLT is. DLT is a universal ledger. And universal ledger, usually you always have two-sided transaction. One is the financial, the second one is the product. And attached to that, you can attach many of these things. By doing that on a DLT, we can have a mutability of data and secure over DLT. It means that the documents and the data will get a new level of authentication. I was working 7 years for the Lehman Brothers liquidation, where at the end, the issue was, what is the latest contract amongst us? What is the latest signature? Documents were there, but not signed. Different things. If we have a depository that is a single group of information for two parties, we can avoid all of this paperwork. Disintermediation, we can reduce middlemen. I'm not just saying outside the process, but also inside a company. Back middle office might reduce the work if we can automate certain things. I'm just thinking out to a smart contract that can be automated and so reduce human errors in between processes. Clear, you need to program that in advance, you need to test. That's the thing we are doing. So we test quite a lot. We have external review. So we spend a lot of money to make this secure. And if somebody today tells me that blockchain is easy to implement and it reduce cost, yes, over time. At the beginning, it's a really hard work and costs quite a lot to make everything happen. What is also important, that immutability, where we can attach certain reports. I'm just thinking about loud audit reports. We can have reviews of certain data attached to it. With the course of time, we can also have the audit firms and the warehouses writing into block directly without having that on paper and upload that. So there are plenty of possibilities. Also very important to us is the reduction of daily operations, where the paper can be reduced and reconciliation somehow through that single group of information can be automatized as well. So in other words, you can use the blockchain, the DLT blockchain, as a single truth, and in your company, you will just attach then the information to your accounting system, to your reporting system. Now it's very important that we also go into the area where we can combine the industrial and the investment side of the business. So by having that, you can think about that an industrial partner that has metal for the industry purposes, at some point in time, we can think about to switch that into investment. So that might be possible if we are on a so-called one platform and secure, immutable. The other side of the business, the investment side, I will hand over to Tim to explain us the advantages there, because Tim is in the industry and he made a step together with Global Palladium Fund into that new world. So I hand over back to Tim to explain us the investment side of the business.
Thank you for that, Marco. If we look at the investment side of the business, investors have a different priority to users of the metal. What an investor is looking for is price exposure, price discovery, or just general asset allocation, price exposure. Difference between price discovery and asset allocation is price discovery is the term used in short-term trading. You're buying nickel at 20,000 because you think it's going to 22,000. That's price discovery. Whereas long-term asset allocation is you're buying nickel because of its role in the transition to the net zero carbon economy and battery technology, as an example. When we're looking at things like asset allocation, then the cost of storage is really important. The cost of the product is really important. And what the product does is obviously why the investor has purchased it. By holding physical metal against, say, investing into derivatives, you're basically holding metal which is above ground. It's already been mined. It's sitting somewhere within the industrial cycle, and you can stick it into a warehouse in the case of base metals, and you can stick it into a vault in the case of precious metals. And then you have a running cost. So obviously, if a product is too expensive, the investor is not really going to make any money because all of the profit is going to go to the running costs of the vehicle. So what we've managed to do using the blockchain is we've managed to prove to investors that the metal we hold is LBMA, for example, that it is held in this location, and the bars that we hold are these numbers. This has all been done before, but what we've done here with GPF Metals is we've actually recorded all of that data into the blockchain for the first time. Previously, issuers of such structures would have recorded this information only on an Excel spreadsheet, for example. It sounds flippant, but actually that's basically how it was done. The vault The vault owner will be updating using Excel and other systems to actually communicate with the investment vehicles exactly what metal is being held on their behalf. We've taken it a step further, and we're obviously using the blockchain to create an immutable record, which we believe is obviously a better, safer, and more secure and possibly more transparent way of recording metal data. What we've also managed to do there, as I mentioned when I was speaking a few moments ago, is ESG investing is really, really important to the investment community. And it's not new for investments, for the investment community. The ESG has been front and center really since the beginning of this millennium. It's been borne out in the fact that many funds now refuse to invest into firearms, alcohol, tobacco, gambling, etc. So ESG investing is not new. But what we can have now because of blockchain is we can actually start showing investors that we can hold metal, cleaner metal. There's no such thing, obviously, as clean metal, but cleaner metal. And Norilsk as a company basically is powered it takes about 53% of its power from hydro. So by its very nature, the metal which Norilsk is mining must be cleaner than most, because coal really doesn't play a role in Norilsk's power supply. The power supply is either hydro, natural gas, or some nuclear as well. So very little fossil fuel exposure there for Norilsk when it comes to mining. So this means that if Norilsk's power supply is very different to, say, a South African miner or a Chinese miner or an Indonesian miner. So we can actually, that's why the geographical location is important, and it's why it's important to investors, because if they can buy lower carbon or low carbon metal, that's something that they want to do. At the moment, when we've embedded a carbon certificate, a carbon credit into one of our new institutional-only products, we've done so at a fixed price. And the reason why we've done that is because we think it may be a step too far today to say to an investor, do you want to buy nickel, for example? And do you want to buy a carbon credit to go along with that? Because obviously carbon trades at its own price and nickel trades at its own price. So today, taking baby steps, we've basically created a vehicle that institutional investors only can access, which allows you to not only invest in nickel, but also to pay a premium for a carbon credit, which goes along with that nickel. That carbon credit cancels out the carbon which was actually generated in the manufacture of that nickel. And those credits that we use are actually internally generated at Norilsk. And again, that can be proved because of the blockchain. So all that data is available, it's in the blockchain, and it has an immutable record that cannot be interfered with, which shows what the carbon footprint was of the mine 2019, 2020, 2021. So that's why this is all very, very important to investors, because investors manage your money, you are the public, and investors are managing your money on your behalf for your pension funds, for your retirement funds, whatever it may be. And we as consumers are demanding that the transition to the net zero carbon economy is now a priority for our governments, and therefore it's a priority for investment firms as well. So using blockchain, we can actually prove to the investors, the custodians of your assets and your money, that the metal we're holding on behalf of them is as clean as possibly can be. Marco, back to you.
Thank you very much, Tim. To close our session, we want to show you an example of the old and the new world. So on the left side, you see we use an exchange-traded commodity. From the old world on the left side and the right side, the vision of the new world. So you see that on the left side, you have many middlemen, you have many companies and participants that needs to be managed. Many intermediaries, cumbersome to set up. And you have also the data attached to a metal detached from the system. So you need to imagine that the data here are not part of the system. They are in in a mining company separated from the investment world. On the right side, you see the possibility that we can create with one platform. You still have an issuer, you still have a mining company who needs to issue the metal, you still have the client, you still have the commodity sitting in a boat, but data, transaction information, smart contract, whatever we explain now on the call is on that one platform. With the Hyperledger Fabric, the technology we're using, we can create certain modules that are managing all of this on one platform. This will bring the innovation. Now, to conclude, maybe Tim, maybe you can repeat or you can maybe share with the audience the three main aspects why you were convinced that the left is at some point in time transitioning into the new world. From your good expertise, maybe you can give us just three main bullets so that everybody understands.
Thanks, Marco. So I think it's really, it is simplicity is probably the key word. If you look at the old world, effectively, all of these standalone entities need to come together to create an investment vehicle, the traditional exchange traded commodity investment vehicle. Because of blockchain, the proof of ownership, the proof of mine location, the proof of carbon footprint, all of this is already recorded into the blockchain. Ownership is recorded into the blockchain. It means that, do you actually need a trustee to oversee the whole platform to make sure that nobody's misbehaving? Do you need the authorized participants actually making markets in these specific products when actually they're tracking LBMA, LPPM, LME pricing? Do you need a broker to stand in the way of you and the market, or can you access the market directly? So all of this can come together in the new world. So not only does it reduce the transaction costs, it reduces the time delay of T+2, T+3, whichever market you're using. That's the settlement cycle. It also reduces the amount of checks you need to do because everything is already recorded into the blockchain. So by using the blockchain, the amount of audit that needs to take place, the amount of reconfirmation that needs to take place, all of this can now be taken as done by simply recording all of the information into the blockchain. My three big takeaways, though, I've said simplicity, and it really is simplicity to the extent that if I say three, it's the three I've mentioned already. It's giving access to institutional pricing. Doesn't matter if you're a retail investor or a professional investor, you can access the pool of liquidity that all of the top miners use to sell their metal, all of the top consumers use to buy their metal. You have got the quality, the same quality of the metal. I've mentioned again, LBMA, LPPM, LME. You have that good delivery metal, which trades at that price. So you're not holding, for example, you're not holding a COMEX gold product and trying to deliver to the LBMA, because COMEX gold operates on 1 kilo bars and the LBMA operates on 12.5 kilo bars. So we're actually holding the right metal for the right market. And also storage. You know, storage is the elephant in the room. If storage is too expensive, then actually the investor's going to be spending most of their money paying for storage. But what we've managed to do is we've managed to embed institutional storage into our tokenization. And that's been, I think, a real key differentiator for us. Marco.
Yeah, so the last word, I think, yeah, we can solve a couple of things. I think I don't repeat the obvious access to storage. I think that was all said. Liquidity, efficiency increase, transparency through the documentation related to ESG. But one closing word is, I think we can write that success story. And I think it's already here. So it's not kind of, if we think back a couple of years ago, it's already here. Now it's just a matter of making step by step and build that into a success story related to linking the industrial and the investment side of the commodity area and how the new way to transact, because that's the advantage is if those two words are meeting on one place, I think it can, a lot of new models, new processes can be constructed. So I'm really pleased that things are moving and things started to move. Thank you very much.
Thank you.
Thank you very much, Marco and Tim. A great start to our conference today. Just mention of Excel spreadsheets. I think working with data, you do, as a data management system, you become allergic to Excel spreadsheets. So it is time we move on, and maybe not, at least to a database, but yes, blockchain for sure.